Mhm. What's going on, guys, and welcome on into the channel. We are going live, going over some of the top stocks we're watching for next week. Hopefully everything works. We are mobile, so I'm making sure everything's set up here on my phone. So I'm mobile here, and then I got the laptop. So hopefully things are all good. But I want to cover what the futures are doing so we can prepare for next week. So we are ready to go for that. Everything else seems to be working just fine. So let me just make sure this is set up so I can check in on the chat and the comments as we go along. But I want to cover some things first, dive into all of that, dive into kind of what's going on so we kind of have a better feel for that. And then we can dive into kind of more questions, more diving into specific stocks and talk about all that good stuff, because that is what it's all about, right? So last week we finished off, it was pretty nasty. Hopefully the sound is good. Hopefully everything is kind of working out. Last week we finished off red. So here it is. Here's the kind of the map from Friday. Lower volume day, generally speaking, across the board, although I don't think that was exactly the case. So let's pull up the Webull desktop and let's start diving into some stuff here. So I'm going to change this line style over to hollow candles. And what I mean by that is I want to go to SPY, okay? And so here's the S&P. Didn't look good, right? Did not look good. But let's pull up. I'm going to go to the order book. So I got a new layout here. Hopefully it kind of works, and hopefully it's a decent size for the viewing, at least on whatever platform you're using to watch. But so, it was generally a lower volume day, although the sell-off kind of changed that. So look at this volume candle we got here on SPY. You see how it's bigger than the prior days? So you saw Wednesday was really a lower volume day. Going into the holiday, kind of expected that. And generally speaking, we kind of expect Friday to be an even lower volume day, although fears about the new variant and fears about what's going on and the market and whatever, it kind of caused a little panic sell-off. So there you go. Good evening I am currently in just north of Atlanta, Georgia right now. So usually in Texas, but just north of Atlanta with parents. So we're going to be doing the live from here, and I'll be headed back to Texas in a couple days. But yeah, so we are looking at the SPY. 50 SMA is down about like $8. But as of right now, let's go back to this. Here are the futures, very green. So small caps, 1% up. Tech, almost 1.25% up. We got the S&P and the Dow up pretty nice. So if you bought some of the dip on Friday, or if you made a play to potentially play, against volatility, for the I guess the pullback in volatility, as volatility spiked on Friday, you play the pullback of volatility. Well, you're looking pretty good, at least for now. Things could change. Hey, Cal, how's it going? Awesome. Glad to see you in here. It's interesting. I kind of took a little bit of a break from the lives, but last week I went live. This week we're making it happen even mobily, right? Not necessarily being at home. But I think it was important to do it because we definitely had a wild finish last week, and the futures are looking green. So we'll see how things play out. Fake out pump. Epic dump week coming. We will see. Hey, anything could happen at the end of the day. But although it seems like the pullback in the market was through fears of the new variant, and it doesn't seem like anything really, nothing materialized, but it didn't seem like it got like way worse, right? It didn't seem like there was much more fear over the weekend, and people kind of not brush it off. People are like, okay, it's kind of the same deal for right now, for what we know, and it doesn't seem like that's necessarily going to change how people are going to go about this for now. So it seems like that's what's happening. I picked up Svxy on Friday. I started buying some, not like a ton, but this is a great way to play the backside of volatility. So here it is, Svxy. Look at this. This dumps hard when volatility spikes. So when the VIX goes up, Uvxy goes up, Svxy goes down, right? And so you can also play this as like a short, I guess, if you want to short this instead of going long VIX if you wanted to, or Uvxy. But generally speaking, take a look at the past couple of months since May. On these hard spikes down, we generally get a nice recovery. And if we do the math on the recovery from the lows of the day on Friday, we can get a nice rebound of up to 10 to 15, maybe even up to the highs, 20% if this thing gets back to all-time highs, meaning not necessarily that the market gets to all-time highs, but it means that we just see less volatility. So this is also a rigged kind of ETF, or I guess it's an ETN, whatever it is. It's rigged to the upside, whereas like the volatility ones are also they're rigged to the downside, right? Long term. Let's see. Tried a 30-point move on SPX futures in for Asia. The volatility was right. I think we're going to still see That volatility is not necessarily going to go away. I think the first couple of days this week, we'll see though. We'll see in terms of ups and downs. However, the VIX is, let's take a look at the VIX again. What we got? We got the VIX is down just about 10%, which is pretty substantial. So we'll see how this plays out going into tomorrow. Again, we could wake up tomorrow morning and everything could change again, right? Anything can happen at the end of the day. So this is one way I don't go in too heavy, because just in case we woke up kind of Monday morning and this thing is down even more, then I'd be able to add in. But if the market doesn't necessarily go up, it could go kind of sideways or even kind of slowly trickle off the downside. But if it's not super volatile and people aren't panicking, this will recover. And this is a great recovery play. So I like to play it heavily. Super low liquidity in terms of options, which, by the way, let me actually add options in here to our layout. Let me add this in the back. Okay, there we go. Super low volume on the options. So I didn't touch the options. You could have played the option as well. I also grabbed the Jets ETF. So this is the airlines ETF. So I grabbed this. This thing went below these prior supports here, which generally speaking, technically for me is not a great sign. However, fundamentally, this is more of a fundamental play, thinking to myself that we are going to be looking at, and I'll have a video actually coming this week talking about some of the thought process behind the airline idea for 2022 and beyond, honestly. I think it's going to be a great play beyond that. Travel-wise, as long, again, the risk is the news that we got this past week, right, where we have the new variant, right, of the virus. The risk is that. Risk is lockdowns. The risk is travel restrictions. But I do believe it's to some degree that risk is diminishing, with time, right? Again, who knows? But this, I think, can fill this gap pretty quickly and get back up to 21 plus, which would be great because I had $20 calls, so those would be worth a nice chunk. And I went out 2 weeks, so that's a quick little scalp back to the upside. We'll see what happens tomorrow. I'll probably sell at least half of that if we do end up gapping up and we wake up tomorrow morning and let's say the markets are up, 1% or whatever they are. If that does happen, then yeah, I'm definitely going to get rid of like half of those contracts at a minimum and probably ride, a few of them if it does hold up. But that's kind of the thought process there. Variant news came out 10 minutes before that futures closed. Yeah, that it did, and it panicked. Everything panicked down the last few minutes of the market being open. And it definitely seems like, things aren't going to be as bad. We'll see. 4 a.m. we will open tomorrow. Will be interesting. It definitely, I think it will. It probably will be. I probably won't be getting up for 4 a.m. But hey, there's nothing, to be honest, that I have to worry about in terms of selling at 4 a.m. There's not really many stocks that I'm too worried about. I have a sell set for for the Svxy. Maybe it'll hit, maybe it won't. And then I have the options that I'd probably get rid of with the market open. I have to wait till the market opens anyway for that. But that said, let's look at across the board. Let's look at QQQ, look at the NASDAQ, see how tech is doing to get a better handle. Tech didn't get hit as hard, to be honest. At least chart-wise, it doesn't look as bad as the S&P. So this has got some good support here in the upper 380s. I would expect that to hold for now unless we see some bigger downside. And if that does hold, we could be right back in, on the Qs, we could be right back up into the 400 range. Wouldn't be surprised if we're back at 400. Could be tomorrow, could be this week, if things do kind of steady the ship and whatnot. I think it's also interesting to note how crypto has been doing. I want to pull up crypto in a second too. We'll look at Bitcoin and all that. So we'll see that. London open at 3 a.m. Eastern will be the first telling sign tomorrow. We'll see Asian markets do overnight. So we'll see how that plays out. Say hello if you're up for 4 a.m. SoFi thoughts. We can dive into some of that. Let's do that. I'm gonna look at Bitcoin first, then we'll go over to SoFi. I do like SoFi as a long-term play for sure. Here's Bitcoin. So Bitcoin kind of pushing up a little bit here. Here's the chart. Here's the daily chart on Bitcoin. It doesn't look, to be honest, it doesn't look great. You would want to see this thing start to hold up. But hey, if it's holding up right around this low 50s, this could be a zone. I'm going to draw a little line here. I know it's like I got a lot of lines, but I'm going to draw another line here because that was the high that we saw back at the beginning of September. So we came down so far and bounced at that exact point. So that's our support. Below that, we can come down towards 50K and even lower. We'll see. But what you'd want to really see now on Bitcoin is this thing get back up over 60K. And it could certainly do that tomorrow morning. Who knows? We'll see. Get back up over 60K and start pushing back up. If not, I would start to look to be a little bearish on Bitcoin if it can't get back up over 60K relatively soon in the next couple of weeks before the end of the year. We'll see. Bitcoin needs to hold up for a lot of these altcoins to keep on pushing. I personally haven't been super involved in altcoins at all. I'm going to be looking into and researching some more of them soon, just to get a kind of a feel if Bitcoin stays interesting. But for now, I haven't gone super in depth into altcoins by any means. Let me get rid of some of these lines, and we can of course come back to them if we need to. Let's see. So there's Bitcoin. Let's take a look at ETH just really quick, and then we'll dive into some stocks. ETH is holding up really nice. I mean, just relatively speaking to Bitcoin, it's holding up really nice. I think I have more ETH probably than Bitcoin overall. What about Solana? Do we have Solana on? Yeah, they have it on Webull, I guess. Solana kind of similar, I guess. It's pulled back a decent chunk, about $60 from its all-time highs. A little more than that, actually, on the dips that we saw a couple days ago. But it's trying to bounce with Bitcoin or with crypto as well. So we'll see. That'll be interesting to watch. We'll have to go to like the Mrnas and the riots and stuff. Mrna is sitting at that 50 SMA. Mrna could be in a really interesting spot tomorrow as well for an idea as a trade, right? I would say risking it down to about $48 and then targeting up here towards 58 first and then looking for more if we get a bigger move. Mrna has kind of, came down to this area just around that 50 SMA and it's looking like it wants to bounce. So I kind of like Mrna as an idea. Honestly, going forward as a possible swing with the risk of, a couple dollars for, risking $2 for, a gain of, 5+. I think it's a pretty good risk reward. So, all right, let's go to SoFi. I like SoFi. It's actually down to an interesting spot. Prior resistance, kind of a key level that I had drawn on my chart here. So it's right at that 200 period simple moving average as well. I like it right here. If it can hold up over to 1750 or so, which it's doing for now, I think we can get back up into a nice little move back up into 20 plus relatively soon on SoFi. It took a pretty big beating the past 2 weeks. But if you were to play this from kind of under 20, which it's been doing a couple times, right? Under 20, back out to about 25, you got about a 40% move from where we're at right now. If you kind of just play the range on the chart, where if we look at the range, you're looking at, buying this thing down in here, okay, which we're at the top of that. So maybe it bounces here, maybe it doesn't, maybe it comes down more. And then if you sell this thing into this range, it's still a solid trade, right? Just range bound trading. Technicals, that's what it's all about, seems like. So I kind of like it here. If it can't hold up here, we could come down into the 16s, even the 15s, and we'll see. We got some good support here as we get down towards that 15 level, though. CRO on Webull. Let's take a look. Sorry if I'm behind. I don't think so. I don't believe so. On Webull's page, you can go to their website too, and they've been adding a lot. They've been adding a bunch of cryptos, but they have on there, I think this should be, you can even just go to search up Webull. Let's pull it up right now. Why not? I was talking about it, so let's just do it. Let's see, Webull crypto. Let's see, trading cryptocurrencies on Webull 7 days a week. Here you go. $1 minimum, get started. Here are the cryptocurrencies that they have. Avalanche, Shiba, Ethereum, Bitcoin. Let's see, Dash. They got a lot more now. Look at this. And then it's all kind of showing us the movement. It doesn't seem like it. But they've actually added quite a few since I've last checked. So this is always a place to go to. They're always adding more here. So stay, I guess come back here to this page to check it. Or you should probably you might even get notifications on if you have the app and stuff. So, but as of right now, they don't have CRO. VXX, let's see. As of right now, we take a look, go back to the futures here, and VIX is down. So volatility is coming down pretty big. So we'll see if this holds. But for right now, volatility looks like it is going to be making a big pullback from where it was on Friday. Let's go to Uvxy and see that at least. Let's see that chart. Let's pull this bad boy up. Uvxy got a little spike here, which this chart, right? Every couple of weeks, you usually see a little spike in Uvxy. Overall trend is down, and generally speaking, that works out pretty well until you get caught up in one of those pandemic type sell-offs, and then you have your Uvxy short that you took, you get rocked. But no, this has popped up quite a bit. I would not be surprised if things steady out. I wouldn't be surprised if this thing is back under $17 by the end of the week. It could come down faster than it goes up. Or maybe not as fast, but it can come down quite fast too. So we'll see. Portfolio. The portfolio's been taking a hit. That's what it's been. I've been mostly just keeping swings and holding on longer plays. It's been literally, I've been saying, right? It's been kind of modeling almost IWM, even though it's not necessarily meant to model IWM. But again, portfolio right now is decently into airline leaps, so we got like a year plus on those. Again, that's kind of the play on the convictions there. And small cap swings have not been kind of the same. So you've had to kind of be very careful, not careful, but it's been a period of time for me where it's been more of like preservation and not losing, all the gains. I've been taking some money out of it a little bit. I just recently took out a decent chunk to set aside for tax purposes, just in case kind of things get choppy again or stay choppy, so that I don't have to like worry about that. It's kind of off on the side. Maybe we'll get more into day trades. Personally, I just don't like necessarily having to stare at a screen, and it gets bad. You look at a screen, or you're looking at your phone all day, you're looking at this all day, you're doing other stuff, and you're looking at this. I personally don't like the day trade side of things. I'd rather be more of a swing trader. And you go through periods and flows in the market where it's like all in. It's not all in, but it's more like let's go, and it's time to push. And then you go through periods of time where it's the same kind of strategy isn't working. I had a strategy that worked well for 2+ years. Great returns in the portfolio, but that strategy has literally not worked the same. Of course, there's modifications. Generally, the idea still works, but the same strategy doesn't work because stuff was up so much small cap wise and has gotten beaten down so far. We have just been in a period of time where the algos have been just in sell, or short mode, where things get ticked down below cash value, below certain levels, below supports, below psychological areas of support. That's the type of thing. So it's really kind of a mind game, to some degree. So it's like I could sell some of my positions just to kind of cut a loss and move on and be fresh. But I also kind of know this game, and I know that I don't want to do that because I want to be in this for the spike. So a lot of the small caps I'm in for those spikes, 50% spikes, so like for my swings. So for example, like an LGVN, not that I was in this one, but look at this one, right? You could have been in LGVN since August. You caught this drop in August. The thing was trading here at like $3. It slowly trickled off and fell down under 3. So you took like 4 months where the thing didn't do anything, right? And then eventually it had a massive run. So if you have a conviction trade, I've just done this, with a small caps long enough to know that I'm not going to sell a bottom on something that fundamentally I think is fine. Fundamentally speaking is fine, because you can have disconnects where stocks fundamentally, now I'm not saying LGVN is worth $30. I don't think it is. But again, I wouldn't have probably held if I was in this for a swing. I maybe have an average at $3. I probably sell this thing into the first day move, but it still goes up 100%. You keep a little bit of a chunk on for a bigger ride, and it goes just like BCTX. I mean, that took a while. I was in that one for a couple months, or at least a month or two. BCTX, you go back, obviously, hindsight holding it would have been great. But again, BCTX, I was in this thing back in here in the 3s. It pushed up to like almost 4. Okay, then it pulled back, and I was in it kind of patient, and boom. You wake up one day, the thing's up 100%. Boom, because you had the conviction on it and you didn't sell a bottom because you kind of know how the game works. So that's just kind of been what I've been looking for. We just haven't been getting as many of these, or at least on a lot of the stocks that I have been in. There's so many stocks you can play. So, eventually the cycle will eventually kind of play in the game. There's cycles to it, and eventually a lot of these things, I want to say they all go, but that's also not true. But to some degree, they all go at some point, because you have insiders loading, you have hedge funds loading. They got to get out. This game is rigged, as we all know. So for the penny stock side of things, these things eventually get run up pretty hard. So that's part of it. It's a long explanation, but that's kind of what it is. Obviously, if I was going cash every single night, different story, right? Then it's very easy to say, okay, this is not working. This is working. Let's cut out what's not working. Let's do what's working. And it's a little bit easier kind of to slowly progress at that pace in a sense. Although it's a lot harder, I would say, for someone who's necessarily day trading to have the time to do that. If you don't have a job or you don't have other responsibilities or whatever during the day, it's a lot harder. And also it could be mentally a lot more difficult. So you kind of weigh the pros and cons. Personally, swings have been great for me. So over the past couple of years, so that's what I'm sticking with. And you go through periods of time where, it's a little choppy. It is what it is. Mrna, here's the thing. I think Mrna is actually a decent idea for potentially a little bit longer term of a play. I don't know if I like it. I think it's going to come back. And I say come back, I mean pull back this week. If the market kind of stabilizes, it probably pulls back 300 range or so. The thing is, though, with new variants, with this kind of, I don't know if it's a surge. I haven't looked at the numbers really yet, surge-wise. But if we do see that, what does it mean? It means these companies are going to have to make more booster shots, and more booster shots mean more money for them. So if that logic stands, I like it, right? I like mRNA. So as long as the boosters remain kind of like a recurring thing, or we see more need for that, whether that's required, not required, I don't know, whatever, then it's probably fine. I think it's going to do well. But the second we all of a sudden get some news saying there's no need for more boosters, if that happens, right? If that comes out at some point in the future, this could take a pretty big hit. So I'm thinking that's the risk with mRNA. But if the short term, the narrative is still there of boosters and shots and all that stuff, this probably kind of pushes up. I would not be touching it on spikes, but dips may get bought up, even though it's made a massive run. Personally, I'm not going to touch it at this point, just because I think longer term, my thesis behind this is not necessarily, bull mode for mRNA. I'm more of the recovery kind of play, everything back to normal at some point in the next year or so. But that, of course, who knows what's going to happen. Of course, it's not up to me. It's up to whatever happens virus-wise. Realistically, it's not. It's up to whatever governments do, whatever countries do. That's what it is. So, I've seen some crazy theories. People talking about how market's going to crash, talking about how more lockdowns coming. All that stuff. I don't know. We're gonna react to it as it happens, as whatever happens. But I don't know. I just personally don't know if I can see that happening, at least in the U.S. lockdown wise. I can see individual states doing whatever they want to do, but I just don't. I can't see that happening personally. But we'll see. CAR. Any predictions? It's holding up quite well, actually. Took a little dip on Friday, but as long as this thing holds up at looks like 238 was the area that it tried to hold up. Let's see, 240-ish, roughly 245. As long as it holds that, it's looking decent. This thing could be setting up for another move. It's been really solid, though. I don't necessarily want to say I want to fight it, but personally, after the run it had, yeah, it pulled back a good bit. It's still up. I mean, from before the earnings, it's still up. From that point, it's still up over 60%. Still, it seems like a lot to me. I just haven't fundamentally looked at them, so I'm not sure about the future. Some of these things, some of the retailers, not that Kara is necessarily like a retailer, right? But some of the retail companies that have done quite well. For example, one of those is DDS, Dillard's. This thing off a cliff. I would love to get back into this thing short if this thing pushes back up and gets rejected up here towards that 365. But I shorted it over 400, and then I covered this thing on Friday because this thing was down, huge. It was down 10% one day, and then it was down 6% more the next day. So I just took the cover. Although they had their special dividend, ex-dividend date, that's all beyond us. So I wouldn't be surprised if we get some selling. Those who got in pre that date, there could be some selling right now. So I wouldn't be surprised. But a lot of those retailers are pulling back. Let's look at Nike. Nike, kind of same story, kind of almost double top right here where it pushed up, kind of double top. Now it looks like it wants to head down. You have that pre-holiday run. And a lot of these things are pulling back. Macy's is one of those other ones as well. Macy's crazy run the past couple of months, but also a pretty sharp pullback. So that's kind of an interesting kind of side to play the backside of some of these retail plays going into the holidays. As you see, a couple months before, they tend to run. Asian markets are open and down for right now. How are you going to play Nvos? Yeah, I'm holding it through the earnings because this is one of those stocks that I believe personally, I don't see it going down much more. Could it go down more? Yeah, and I'll probably buy it. But it really is a stock that hasn't run. We take a look at this thing really since it uplisted. It hasn't run. It's been since April. You go all the way through. This thing was trading up over $3 at one point a couple of times. I think this is going to be one that has a spike. It's a super low. It's like a 2 million float. Let's go to Finviz and check. I'm holding it through the earnings for that reason. I don't really hold a lot of stocks, to be honest, through the earnings, but I'm honestly, for what it's worth, I'm not really worried about that. Here's Nvos. You have a 8 million share float, a $35 million market cap, okay? Insiders own 69%. That's huge because usually for a lot of these stocks, a lot of penny stocks, like you see them pump and dump, but insiders don't own anything because they don't want to be involved in the stock long term. They don't want to be in this thing for the downtrend. So when you see the insiders own a decent portion, and when I say a decent portion, you want to see like over 20%. So over 50% is beautiful. When you get that to be the case, I like that a lot because it shows that they have a vesting interest in it right now. And also, they're not going to sell this thing low. They're going to at least wait for this thing to spike. They're going to get some positive news. They're going to get something good. It's going to pop, and then they're going to dump it. That's kind of just the nature of how this stuff works. And so that's what I like. Also, that said, they just recently signed 7 letters of intent. This is also an interesting side piece to this puzzle of why I like kind of holding this. The pharmacies that they signed 7 letters of intent to acquire pharmacies, or 7 pharmacies, right, in the United States. The pharmacies collectively generated approximately $55 million in annualized sales in 2020. Okay. They contemplate an all-stock transaction. Okay, whatever. So $55 million in sales, in revenue in 2020. Now, I'm not saying that revenue means profits and means everything, but that's also just one piece of the puzzle here for Nvos. And we're talking about a $35 million market cap stock. Okay. So if that's the case, then this to me seems like it may be grossly undervalued, and it's just a product of the market being weak and no one knowing about it, right? Is what it is. So for me, I hold that's the type of play I'll hold through earnings. And if it dumps to 1 or sub 1 because of some earnings, I really don't see much attention on this thing at the earnings report anyway. Our earnings report for a company like this has honestly minimal downside to me, and really, to be honest, if the earnings report's good and revenues, this is gonna be one of those like revenues up X%, right? All of a sudden everyone's like, wait, what is this? And everyone starts coming to it, and next thing you know, the thing is pumping up and it's the next 100% runner. That's kind of why I like it. So that's the at least the thought process behind that. I know it's that's that. Weren't you meant to hit 100K this year? Hey, we have a goal of hitting 100K by the end. I had a goal of hitting 100K. By I don't even know if I had necessarily a date set in mind, but it is what it is. I'm not day trading it, so I'm playing the swings and I'm playing the ups and the downs, right? If the convictions that I have work out, then this is fine. I'm not going to try to get there. The problem people have is that they see a lot of stuff on social media, and to be honest, Twitter specifically, where they see a lot of crazy returns and they see crazy numbers. And not saying that that's not possible, and it certainly is. And I know that I can certainly do better. Personally, but at the end of the day, the reality for most people is slow and steady to some degree wins the race. Now, I'm not saying slow and steady by investing in an index fund and just 10% per year. I'm saying you can do, 25, 35, 50% per year, 100% per year, slowly build yourself up to those levels, and compounding at that rate is massive. So I don't really care necessarily how long it takes at the end of the day to get to that point, right? But it's also, you also kind of see the reality behind playing that live, rather than somebody who maybe just says all this stuff, doesn't show their numbers, but says this, and it's like, okay, this person's always there's on social media. You generally will see that, like Friday. Oh yeah, guys, I was all cash. I was all cash on Wednesday. Yeah, I knew this sell-off was coming on Friday. And then, come Monday, oh, you didn't buy the dip? What are you guys talking? You didn't buy the dip? That's kind of what you see on social media. And it's BS. A lot of people are doing that to, for whatever, to gain more followers, to do this, to do whatever, right? And at the end of the day, what ends up happening is most people are more confused. They can't see how they're coming back from, losses or periods where it's slow, this, that, and the other thing. And it ends up, hurting people at the end of the day, most people who follow along. So at least you guys know for sure, like it's real, right? The Webull portfolio here is real every single day. I do probably want to start a Trade Zero, which I've been looking at Trade Zero actually. Here's their page. It's like $60 a month for the software or whatever. Free trading software. It's not really free. Pricing, if you go to that, it's free, blah, 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 but it's actually going to be like $60 a month for their trade or Zero Web and Level 2 Zero Pro. So that's that. There's also the platinum version. If you have over 50K to dump into an account, which if I was to transition at some point over, maybe I'll do that at some point. but it's like completely free. But because you have at least 50K, you're like a higher tier client for them. And so they don't have to, they give you discounts on shorts, personal, liaison, whatever, priority request, all that stuff. I'm thinking about starting one of these and just using this as it's like a cash every night. Every night I go cash. There's nothing to worry about. Maybe if I see something, I'll take a trade on a day and that's it. The Webull portfolio is more of like, I have bigger picture views for some stuff. Yeah, I play small caps, and yeah, if I see something and I end up taking a day trade, I take one, but I'm not really necessarily intending to do that with everything. It's generally looking for bigger picture moves to be able to kind of like not have to sit there every day and watch stuff, but it is what it is. It's been, the last 3 months have been super rough for that stuff, but things will change. The thing is I see a lot of people doing is that what will end up happening here is, you're doing something small caps, it's not working anymore, and you go over to like options, or you go over to large caps, or you go over to crypto and you go do something else, and then you miss out on that. So for me, it's more of like, I'd rather sit through the choppiness or the slow periods and just observe and learn as much as possible, so that if I ever see this happen again, now we've had a crazy past year and a half, 2 years, but if you ever see something similar, you have that experience, you have that behind you, so you can make those decisions, or you can at least be prepared and be better and do better when you see that happen again. So for me, it's the problem. The biggest thing now is identifying algos and identifying when it's go time and when it's not, and being able to kind of be more nimble in the portfolio around that, especially for small caps. So when is like the sentiment, and when are the algorithms turned on in a sense? And when are we seeing stocks running up? When are we seeing stocks kind of being bid up slowly but surely, right? When are we seeing those 100% runners, the sustained runners, the 1, 2, 3, 4 day runners? When we're seeing that, versus how to understand when that's not happening, and start to kind of position yourself accordingly. I think it will help. It helps kind of minimize some of the unrealized kind of pain, and it can maximize certainly when the time comes. So also something to note too, going into the end of the year, I have IWM calls as well. We'll see how this plays out. But I want to see it hold 220. If it can't hold 220, I'll probably get out of that. But going into the end of the year, we also generally see small caps pick up for the purpose of we see some tax loss harvesting, what people are saying kind of is happening potentially right now, where you'll see bigger money, people, funds, whatever, taking losses on some positions because they are able to kind of write that off against their income or against their other gains. And so it looks like they made less money. But we generally see small caps pick up. And so what does that mean? It means that December into January, even February, generally are pretty strong months, because now it's like starting fresh. I can enter some new positions. It's a fresh year. We're getting into a good start, and you want to start the year off nice and strong. And so how do you start the year off nice and strong? You turn on those algorithms. You got tons of oversold stocks with tons of range to the upside that maybe even some are, fundamentally undervalued to a pretty big degree. And that is where you can kind of take advantage. And so that's why I'm expecting that period to hit and pretty strong. So it was a good past couple of weeks. Small caps also on Friday were not down as bad as they could have been based on how bad the market was down. We've had days where the market's green, small caps are down massive. So market being the way it was, market being red and small caps not being down as big is actually a pretty good sign for them. So we'll see how it plays out in this week. Important to be nimble and adaptive. Yeah, exactly. That's a huge thing. That's probably the biggest thing that I've probably learned the past year, right? Probably not, even though did well, I grew the portfolio quite a bit, right? The thing this time last year probably was at the Webull portfolio was probably 15 something thousand. Now it's up over 35. But we were over 40 something, over the 40s at one point. But we pulled back since. But again, if I had known or had seen the market for many, many years prior to last year's run, it would have been a little bit easier maybe to push the pedal, because we were getting some crazy moves. Hey, this is crazy. These are moves that happen. They're happening more and more. They're going crazy. What did I know, right? And then after that, there's a period of time, I remember for sure, it was a period of time that we hit I remember at the gym thinking to myself, the market keeps going higher. Small caps are going crazy. It's insane. Market's ripping. And I'll pull up futures really quick too. And it's like, well, I just don't see anything. There's no bottomed out penny stocks. There's nothing, dumping. Everything goes higher. Everything's going up every day. Like what's a good deal? What do you buy? What's the next play, right? And at that exact moment, that was like mid-February. At that exact moment, that was the top. So looking back, I kind of, without realizing it, I knew it was the top. It was my brain telling me, hey, like I literally don't see any good setups. There's like no stocks under $1. Like what's going on? That was like a telltale sign. That was the top, but you wouldn't have known that unless you'd experienced that. So now going forward in the future, you kind of have that experience. So if you start thinking that in the future, if I start thinking that, that's telling me risk off. That's telling me let's not be going massive in penny stock. Let's get out of some of these things. Let's maybe look at some positioning ourselves on some shorts maybe and take advantage of some of the backside. That's kind of now the experience that you have and you build up over time. And being through the ups and downs of this crazy pandemic, post-pandemic market, there's a lot of experience and a lot of things to learn from it. So it's good for a lot of those who've been sticking through it, which I think is huge. Let's see. Nvos, and I think it continues to drop. Yes, it does. It does. But it's literally one PR away. It's an earnings report away. It's one, something away from that changing pretty quick. And it's one of those that I just, based on everything that I have in front of me, especially the insider, what do we got? Insider ownership. I have no reason to sell this thing here. And there's a lot of people who have, way higher averages than, I have. And so I'm not worried about that one, to be honest, at all. 2020 easy to make money. This year it's been rough, really rough. Let's hope for it. We'll see what happens. Will we get that Santa rally? At least the markets futures. I guess it's not December. I guess today. Tomorrow. But this week we have December 1st, Wednesday. It is. So we'll see how December starts off. We will see. BTC bounce. Stocks will follow. That's another thing too. I think that's kind of crucial for both. I think for Bitcoin and for stocks, I think that if things aren't, I'm not saying that we have to see all-time highs on stocks or on Bitcoin for the other to follow, but I think both will be. Bitcoin will probably feed off of the market being healthy, stocks, and kind of vice versa. The problem that we'll see, I think, at some point is that Bitcoin will probably take a pretty big pullback, and you kind of see these periods of time where the market pulls back and Bitcoin pulls back too. And there's a lot of potential explanations. I think one of the explanations is that people are looking and they are potentially kind of cutting losses. They're pulling money from here and going into stocks, or they're pulling money from here. And so when stocks go down, they want to buy more maybe. And so they're pulling money out of crypto to buy more. And so you kind of see the push and pull. I think that they're, to some degree, everything's going up. It's all good. Everything kind of goes up, but things start coming down. You kind of see, I think you'll see both pull back. Eventually, you don't want that. I don't think that correlation will be there forever, but to some degree, I think it's there for now. Hopefully, Zim is going to have people who didn't take profit. Let's see. You can get the same similar platform as Trade Zero with TD. Yeah, I know. The thing is, I want Trade Zero for the shorting purposes. TD is super difficult in terms of the shorting. I have had, and I still have a TD account. I don't think I have any money in that anymore. Maybe I have some. I don't know. But I don't really use it. I use it as like a watch list kind of. That's really it. But yeah, I want the Trade Zero for the shorting abilities. Also the 4 a.m. trading hours, which I don't think you get on TD Ameritrade, at least as of right now. $60, yes. To me, it would be worth it if you're more of like an active trader for sure. For someone who is just kind of buying and holding, investing, definitely not. TD Ameritrade is fine for that, or you can probably be fine with TD Ameritrade for It depends. It depends what you're comfortable with. Depends what you like. So I want to try it out, and that's my next at least trial run, and we'll see how it goes. We'll probably put some money in at some point and just test it out and see what we can do. Having humility is priceless. I use lots of options hedging against long and short positions. I'm learning more options. Yeah, options I think honestly, I've been looking at playing them more for even just day trading, right? Making volatility work in your favor. Yeah, I think for sure. That's the thing. If you get caught up in a period of, let's say, 6 months or 3 months where stuff doesn't work out and you go and quit, what's the point? Why do you do it in the first place? If you're trying to do this long term, or if you're trying to do this to make kind of life-changing money to some degree, or build your wealth massively, right? And you're gonna give up after 3 months, 6 months. What are you doing? I just honestly, people gotta stick with it. You're not gonna have a green day every day. Now, again, if you're a day trader specifically, there's perks and there's pluses and minuses. If you are only a day trader, You wake up every day cash and you say to yourself, I have to work for my money, right? Rather than let my money work for me. Now, your money can almost hurt you in a sense if you're in kind of crazy risky positions overnight, and it can hurt and it can be kind of volatile, the swings. But if you can kind of outlast, or you're able to kind of handle the ups and downs of a portfolio, you're fine swinging or holding long term. But if you can't do that, or you're not someone who likes to do that stuff, maybe day trading is best for you. And it's a little bit, to be honest, easier mentally, I think, at times, if you can be very kind of, detailed, and you can be very kind of, I don't know what the best word is. If you can be very kind of organized in terms of how you play things and very relaxed, and you keep your emotions in check, you come in, you nail a trade, you move on. Your day's green, and that's it. You don't have to be kind of holding a million things, worried about this and worried about the market. If the market's down, you can go but puts. Or if the market's down a lot, wait for it to kind of exhaust out and look for stuff that's down huge that makes no sense and play the bounce. I mean, you can play it both ways as a day trader, and you don't have to necessarily worry about what the market does every day. You wake up, you see what the market's doing, you see what the stocks are doing, you see what stocks have news, what's driving it, and boom, you can make your trades, make your decisions off that. So there's perks to that, and I think, to be honest, it kind of I won't say it keeps me up at night, but it makes me think, like, should I think about doing that more often? Should I think about doing that? Should I think about kind of not forgetting or taking a chunk of money, putting it into stuff like that, buying more buy and holds, which I do have in the IRA? It makes you kind of think, but it depends. Over time, I think you'll kind of figure out what's best for you. Are you more of the swing trader? Do you like swinging? Or do you absolutely hate waking up one morning massively red, even though it might not hurt the longevity or the long term of that position, or your account or your portfolio, even though, long term, the idea, the plan's in place? Are you the person that is going to panic sell, or are you not? And so that's part of the game, the battle that you got to play. Okay, let's see. All right. Transparency and passion. I appreciate that. That's what it's all about. The end of the day, I think that's key in terms of longevity. Not necessarily, in the market, but also I want to say too, I guess, on like the platforms and stuff. Not that I'm necessarily out here because I'm looking for millions and millions of thousands and thousands and whatever followers. I tell people all the time, if I did this right for the followers and for this and that, I would have stopped a long time ago, right? I wouldn't be doing it, right? Because you go through periods of time where it seems like no one cares. And I don't care. I do it because I enjoy it every single day, and I want to learn. I think there's a lot of value to be had from my mistakes, from seeing other people's mistakes, from my wins, other people's wins. All that stuff is good. So I think for everybody, that's what I think it's all about. And I really think, as I just got a price alert on my Coinbase. Bitcoin is up 7.24% in the past, 24 hours, something like that. There's not really a lot of transparency, to be honest, across a lot of social media these days, and there really needs to be more. So seeing the wins, seeing the losses, I think is huge. Okay. ZIM, would you wait for the dividend? Let's take a look at this. What is ZIM? Shipping services. This is actually pushing up quite well. Honestly, I don't know anything about them, but if they hold over $50, it looks good. It looks pretty good to me. It's holding up quite well until this trend kind of cracks. And what I mean by trend, here's the trend, roughly. Until this trend cracks, let's see if we can draw like a channel. Let's see if we can do that. Can we get a channel going? I don't know if I have a. There it is. Until this trend cracks, so this channel kind of cracks, I would hold it. So if we start breaking down below, let's say 47, then yeah, that trend is cracking and that's no longer kind of holding up and building those higher lows. So, personally for me. Warrior Trading's way of trading actually real. He makes like 20. He honestly, I know who you're talking about. I haven't looked too deep into this guy. Personally, I don't have bought anything from him. I don't know if he sells anything, but I haven't bought anything or, free courses, whatever. I think it definitely is. There are tons and tons of ways to trade. I believe from my, understanding, he's very much a momentum-based trader, trades the high volume trades, trades the penny stocks, trades those things, the small caps. And that's what it's all about. Like he'll buy stuff that's breaking out and it goes higher and takes profits. He'll play both sides. He'll do it all. I think for sure the problem is that most people initially are going to struggle with that approach. I think a lot of people will. you have to be a lot faster. You have to be on your game and on point, and it takes a lot of experience and time, and it takes building up a good foundation. It takes building up a solid back. It takes building up a solid backing, a good account, a good size. If you have all that in place, then I think it's worth a shot. It's the same thing with prosperity trading. I think it's one of the groups that I've been in for a while. But prosperity trading is essentially a Discord group. And it's like you got to pay for it, whatever, every single month. And I've paid for it, for the past couple of years because I like to hang out in the swing chat, get ideas from other people, and it's awesome. But the guy who kind of created it is much more of a momentum-based trader. We'll see breakouts, we'll play breakouts. Sometimes that doesn't work out, and for some people, things will pull back and they'll hold a huge loss. And it's like if you're going to take a 2% to 5%, maybe 10% profit on a trade for a breakout, you better not be taking a 20% loss. You better not. And so some of these momentum stocks, for example, like LGVN is a perfect example. The past 2 weeks, past week, this thing has been super volatile, right? Super up and down. But you can't hold this thing. Like if you're buying a breakout to all-time highs here, you can't, let's say, push this thing up to $30. You better not be holding it down. And many people are going to probably hold this thing and sell it in here and then only for it to rip higher and then chase it higher. So you've got to have experience, and you have to have, honestly, a lot of kind of understanding and decent risk management in place. So personally, that's kind of what I see behind that. But yes, also when you're talking about trading with a lot more money, 20K a day is nothing, right? Some traders, 100K a day is nothing. Some million a day. It's really a game of scale. So 20K a day, to be honest, isn't that much for someone who has, millions of dollars or who's made, hundreds of thousands or millions of dollars in the market for a long time. Do I follow any YouTubers? To be honest, I don't follow too many. I'll see some videos here and there, but I definitely don't follow YouTubers like stock picks or anything like that. Maybe I'll see a video or something pop up in my feed and then I'll see something. But some of the ones that I know are good in terms of quality content, in terms of quality value, I know the Zip Trader is great. I don't watch, I'm not like a religious, watcher of some of these videos, but I know the Zip Trader is great. Charlie does a great job, puts together some great videos, has a great thesis behind his ideas, and has, a great feel for technicals and fundamentals and all that stuff. I know that, let's see who else. Joseph Hogue, Let's Talk Money, awesome channel as well. Highly would recommend following him. Much more, I would say, longer term approach. Definitely a great, not necessarily like your more active trader, which is why we collaborated on the technical analysis course, but definitely someone who I think is worthwhile following. Also, Whiteboard Finance. Marco Whiteboard Finance is great in terms of getting he's like, honestly, like think of it as like an econ professor, like that's like telling you like what you actually need to know in real life. He's great for that. Outside of that, like that's a couple people off the top of my head that I know are solid. There's a lot of other, kind of, I don't want to say BS, but there's a lot of other BS out there. A lot of people who have videos, who have channels about just centered only around penny stocks that, when you start pulling, views, like, 20,000, 100,000 views on videos, you're moving some stocks, you're moving cryptos, and you're moving stuff like that. So you got to be careful. You understand that if you're doing that, those things are moving after someone posts a video. So I think it's important to understand kind of if you're going to buy a stock after, sorry, I'm getting like notifications. If you're going to buy a stock after somebody posts about it, right, on a YouTube video or a Twitter post or anything on social media, if it's spiking up, look at the short-term time frame. If it's spiking up, step back. There's no need. There really is no need to just immediately FOMO into it, and you're going to be down within like seconds. You're going to be down on the trade. So just be careful of that. Let's see. That's sure I would mention it to you. See, I appreciate that. But for those who don't know, I would definitely, if you haven't used TD Ameritrade, it's worth having as a second account or a backup or a main account, whatever you want to do. I'm not sure, depending on what people like to use. I know Webull, a lot of people like to use Webull these days, but it's definitely not like, there's many more out there. Let's see. Okay, let's dive into some more stocks. Thoughts on Zoom puts. So Zoom pop, I thought about that too, because it popped up a little bit. I think puts, this actually looks interesting to me. Puts under 219. Zoom puts under 219 I like. So here's the chart. Here's the 1 hour chart on Zoom. Let's see. I would say under 119, I like Zoom puts on this thing to come back down towards about 210. That may happen pretty fast, but we'll see. It popped a little bit because of the news. I think Zoom comes down to 210. So under 119, I like it, and we'll see what happens. GPPI moving up. Let's take a look. I don't know. If it's an OTC, I don't know. It may be an OTC. I don't know. Those are a lot of those are just kind of hype plays. Personally, I don't know. Straddle option strategy at earnings. It is good. It is potentially a great idea. You just need to get that kind of wider move. So the problem is that if you do that for an earnings play, the premiums are going to be expensive. So it may be a little more difficult to get that move. So you kind of let's just say for example, like an Apple, right? Let's say for like an Apple, you play you play one of those option strategies. There's actually a lot out there, like the butterflies or the straddles or whatever. And let's say you play Apple for like a play, and you think Apple, before the earnings report is going to be, here's the earnings report, right? You think Apple is either going to go up to 155 plus, or it's going to go down to 145, or less. And it's like at 150 right now. If you don't get, if your profit zones are 155 or more, or 145 or less, right? You didn't get it, because it was right in between and kind of stayed in between. You got to be careful with that. I wouldn't be going in huge, but for something that has gotten, personally, for hype stocks. So one of those, I wouldn't say Affirm, maybe is not the best example right now. Let's see. What's Affirm? AFRM. This is one that's been kind of wild after earnings reports, up and down. This could be an interesting one for a straddle or for an idea like that into the earnings or going up into the next earnings, because if they're great, people have seen this thing after earnings go crazy a couple of times. So awesome. If they're not great, then this may sell off a good bit because it's been up quite a lot. So we're looking for those stocks with obviously higher volatility. Of course, they're going to be more expensive, but where you can kind of see a pretty big move coming in terms of looking back to their past history, if that makes sense. I like the idea. I do. But maybe trying to get in, a little bit ahead of time with some time on those options, making sure you price it in and understand where your price targets need to be for this thing to work out. And as long as that's in line, it's fine. I'd say go for it. Yellowed Zim before the earnings report, didn't take profit. I was waiting huge. Yeah, I don't know. Profit. You never know when the peak is going to be. Let's go back to Zim. You never know when the peak's going to be. You just never know, right? So again, this has been one of those. It's been kind of, honestly, hasn't been super, super volatile, but it's been holding up. As long as it's holding up into the low 50s now, it looks pretty good. Love the fact that you're teaming up with Joseph. Yeah, he's awesome. He's great in terms of what he does. He's he puts out good stuff. He does when it comes down to it. From working with him, he really, you can tell he puts in a lot of time into researching videos, and he's not making a video randomly. Like you'll see some people, and I've seen it too. Just to kind of, I don't want to do that in terms of I'm not going to be coming and calling anyone out saying, look, this is just BS. This guy's just kind of pumping stocks, or he's just doing this. But you can see, there have been, and I think it's thinning out because you can kind of see through the BS, and people are kind of quitting. But there were a lot of guys that kind of came out of random basements, almost in a sense. I don't want to say that in a bad way, but they came out of their basement. And they're in hoods, and I'm not saying that realistically, but they're kind of these random people who are all of a sudden start making stock videos, and it's where'd you come from? And it's the same stock every single day. It's like this, it's like that. It's okay, well, what do you I don't know. Sometimes there's quality stuff there, but a lot of that stuff, a lot of people just kind of just spew nonsense, string you along, and then if the market goes red for a couple of weeks or the market gets kind of choppy, and they are gone, and everyone who's been kind of playing into their hype is holding a bag. And a lot of times it happens with a lot of penny stocks, a lot of OTCs. And so those two kind of know how I do it. I do like the penny stocks. I do like trading them because they are great trading vehicles, but they're not great long-term holds. So you have to understand that. If something fundamentally changes behind a play, I get out. That means a bad earnings report, something I didn't like, something along those lines. Market conditions could change. Could be a technical, level that breaks to the downside. I'm out, right? Also, I like to be in things that not many people are in. So I'm not going to be in a penny stock that people are talking about on Twitter all the time. I'm not, because I know it's already inflated, and I know that it's just waiting for some bad news, something to happen. This thing sells off massively, and I don't need to be in that, right? That's kind of my style of how I do it, or at least what I look to. BBIG, honestly, I don't know. I would say it's dead. It's down at 327. It's coming down to an interesting spot where it has bounced before, but based on how the market's been, this could easily come back down below where it was trading at, below like $2 pretty easily, right? So it was super inflated for a while, and it was a great short back to the downside for anyone who was able to take advantage, although it was expensive, which is another reason why I want to kind of test out Trade Zero because of the shorting fees and the availability. I know on some platforms like Webull, for example, yeah, you can short stocks and they may allow you to short, but if there's no shorts available, then you can't short. And for some stocks, or for most people, it's probably a good thing. But if you're noticing an intraday runner, like let's say a stock is moving up and it's gone up massively in intraday for some fluffy news, and all of a sudden it pops up and it gets rejected at the high of the day or something, and it comes back down, there is an opportunity there in my eyes to take advantage of a nice chunk back to the downside on a short. And so I would want to have a broker if I was going to trade that more often, which I currently don't. But if I was going to trade that more often, which one of those things that I've kind of been logging and noting and saying, hey, this seemingly is there a lot of the time, intraday. Not going to hold that short overnight, but it's there intraday, then I want to have a broker that will allow me to get access to that in a cheap manner and have, short locates. So I don't have to sit back and go, I guess I'll have to watch tomorrow and see what happens. And then, over that next 24-hour period, the thing goes up or the thing goes down 20%, it goes up 50%, it goes down 30%. There is so much money to be made on both sides. So if you were into that stuff and if you wanted to kind of get into that, then I think that Trade Zero is probably a good idea on the short side in terms of a broker. So we'll see. Front runners that move those stocks. Yeah, that's just the pumpers and whatever you want to call them. Tons of people on Twitter do that stuff. A guy, I just saw recently a guy got arrested, I believe, for doing that. More so false information. The pumpers are never going to get caught, as I talked about in a recent video a couple weeks ago. Pumpers are never going to get caught pumping because you can like a stock, you could say this is good, I'm buying it. And if you have a lot of followers and you've done well in the past, or you post fake profits, I'm not sure if people, some people, I'm sure people do. I'm not saying everybody does, but if you post fake profits, what's it do? It brings that kind of incentive. It makes people say, wait a second, this guy's good, right? I want to buy what he's buying. And then it pumps it up. And then they're immediately up. Their stop loss is up above their average. They're never going to go red, right? So that's kind of the nature of some of those pumpers, or whatever you want to call them. Front loaders, front runners, all that stuff. Piton popped up. I think Piton could be a good short tomorrow as well. We'll see. It didn't pop up that much. It dipped down to 41, and it kind of popped a little bit on that news, and then it's like, doing its thing. So I don't know. Maybe it's got a gap on the chart. Let's see this. Let's see. We got a gap on the chart. Here's your range from where we're at right now up into this 86 area. Could be a decent idea, although I don't know if we're going to hit that level. We'll see. It's been one of those stocks that got super, inflated, and now it's back down. This thing was trading, looks like back pandemic time, this was trading around, $20, just over $20. So, we're at 46. I don't know fundamentally what has changed. It has a lot changed. Is it worth more? Is it worth, 46, or is it worth more? I think there's arguments probably both ways, but I would probably want to look into that. But there's a gap. So if this thing gets going and there's momentum to the upside, over looks like $63 is into open space on the chart. This gap now, all gaps don't get filled. Please don't get me wrong there. They do not have to get filled by any means. But from a technical perspective, when you enter into a gap on the daily chart, okay, you're looking at the 1 year, 1 day chart. When you enter into a gap, many times those get filled up or down, depending upon where the gap is and where the stock has to go. Many times they do, and they could be good areas to take profits, to get into a trade, breakouts and whatnot. So that's that. Let's see. Do you expect NIO to start moving? Or I think the China stuff is too speculative right now. That's the only problem. I honestly, I have thought about it too. I've thought about taking like a NIO, a leap on NIO. I've thought about it. It's consolidating for a while. If NIO pulls back, honestly, into like the mid to low 30s, I'll do it. I'll grab a leap on that at a minimum, I think. But for right now, it's consolidating, in the upper 30s, low 40s. So it's kind of doing its thing for right now. but I think that it's just being held back by China. I think there's just too much uncertainty right now in China, and so I don't really know how it's going to be. But that said, having this thing cool off for like a year, which we're almost at the point where this thing has been cooling off for like a year, because it made its crazy run, and then it got to November. Yeah, it pushed up to hitting highs into early January, but like it's still in this range it's been in the past year. So it's good. It's good to see that it's kind of been cooling off, which is healthy. It's a healthy kind of play. Let it consolidate for quite some time. And this thing gets down to the lower 30s. Of course, if there's fundamental news that changes this company, right, that's maybe a reason to step away. But if there's nothing fundamentally that changes here, right, a bad earnings report could be, raise some red flags. But again, looking deeper beyond that, if nothing fundamentally changes, we're seeing demand, sales, deliveries, all kind of still stair-stepping on up. If that stays and this stock goes down, that's a buy in my eyes, right? That's just simply how I'd see it, right? That's that. Rebound or tank session. I think for right now, I think we're going to see a rebound. And that's what the market's telling us. For futures are telling us it's good looking green. I think we're going to see a rebound. That could change tomorrow morning, but I think we'll see a rebound at least a little bit. And then we'll see what happens. I don't want to see a huge rebound, to be honest. I would like to see like a little rebound, maybe not like SPY. Don't go up 2% tomorrow, please. Like if it stays in that like 1.5, like that's good. Don't be up 2% and you recover all the gains or all the losses. We're right back at all-time highs. We're right back to the same place. You would kind of want to see a healthier move, and so let's go to SPY. Right? Like, let's see these pullbacks. We get these bigger dips. Like, can we get a nice kind of slower grind up like this and get all-time highs by the end of the year if we're going to do that? Because that would be a little more healthy. Again, though, we have to understand, too, that even though, right, things are bullish and everyone's, seems like everyone's fairly bullish on the markets, maybe not, but I think people generally across the board are. You have to understand that the market's not going to go up 30% every single year. So I would not expect the same type of movement on SPY into 2022. Like, don't expect it to be at 600, because what is that? What does 600 mean? If we hit 600 on SPY, right? Let's say we finish the year right now at where we're at right here on SPY. If we finish that and we hit 600, that would be another 30% move. So I wouldn't expect that. I expect SPY up into like the, mid fives if things stay bullish by the end of next year, right? So just understand that we're not going to see this crazy movement on SPY and the indices forever. And it will be healthy for it to slow down, okay? And if it slows down, it's probably good for us because then the individual stock pickers, I want to say, in a sense, picking individual stocks, playing those undervalued plays, playing the smaller cap plays that move a little more, there's more incentive there. Because if Apple's only going up 5%, 10% per year, what's the incentive in Apple, right? The incentive is there now because it's a less risky approach and it's a solid company. It's not going to drop 100% or 25% value in one day, and you can ride this thing up. But again, that's not going to be there. It's not going to happen forever. It's not going to be the same way forever. So we'll see. It's easy to see through the BS. I have an old saying about these stock gurus. If someone is good at trading, they would be selling a stock, not advice. I'm 42 years and seen a lot. There you go. Body all-time low. New Year's coming. Hey, you know what? It's not a bad idea, but again, the sentiment hasn't been there. Let's take a look at it. Oh, hey, look, it's curling. So 258 may be the bottom. Maybe it's the bottom. I think this could be a good idea as even a swing from where it's at right now, back up to about 425, 450 or so. Seems like that could be the zone. 450 is back up into that kind of gap. So Beachbody, that's a decent range, to be honest. That's some good range from where it's at right now. Up there, I would check that earnings. That's a 50%. That's a pretty good move. I would check that earnings report, see what the earnings report said. And dive into that. We had revenue of 200 million. Do we have other earnings on here? 200 million versus we had 223, 226, 208. So revenue was down. Maybe the numbers were down, I guess, a little bit, possibly. I don't know. I still think it's a good idea. I like it. I still like it. But New Year's time, people looking to get in shape. This could be I can get behind it. Right? I get behind it, but will the market get behind it? We'll see. Let's see. I'm going to wrap things up soon because it is getting to be roughly like an hour. DKNG bouncing off support. I'm telling you, I like Pan more, but DraftKings is probably a safer play. And they got ARK Invest support. behind it, I guess, to a degree, right? So prior supports, yeah, roughly around 35 is an area. It bounced here this time last year, roughly. So let's see if it bounces again. From this time last year, DKNG went from 35 up to 70 plus, and it went over 100%. Does history repeat? I don't think it will that fast, but I like DraftKings. I like Penn a lot at these levels. Penn personally, I think has a different and a more unique approach to the sports betting sector, I think, than DraftKings, and it's been getting killed. Earnings report, yeah, it wasn't great, wasn't good, and I could see a drop, but then there was the whole Portnoy news, and then ever since then, selling. Volume has been elevated, though, ever since. That could be loading up. We'll see, and I like Penn to hold $50 or so. First target will be 63 and then 73 area, and then we can see what happens from there. But this is one that I would say Penn's a year plus play for me. I would like to be here for the next year plus, ideally, and then I have options that expire out into 2023. So that's my plan. Neo going to go sideways for a while. Money manager's moving out. 13 Fs and 13 Gs. Yeah, I'm not surprised. I wouldn't be surprised. And I would kind of like that. I think picking Neo up at some point in 2022 could be a decent idea. Let's see. All right, let's see. I'm going to go back to checking futures, and I'm going to wrap things up. So I appreciate you guys for all tuning in. We are looking at futures right now. Small caps up 0.5%, tech up 1%, S&P 500 up almost 1%, a little over 0.75%, Dow up 0.5%. VIX is going to be down 8.5%. As of right now, these are the numbers for right now. We'll see if this holds. And I appreciate you guys for tuning in like always. Thanks for watching. This will stay up on the channel. So there's that. Links to get free stocks down below. Take advantage if you want. If you don't, I don't care. It's up to you. Take advantage of Weeble's promotion now. They just emailed me saying, hey, like I miss, I guess, explain the promotion in a video. So they were like, hey, what are you doing? 2 free stocks, okay, and $5 in free crypto when you sign up and deposit any amount. That's the promotion right now. I think until at least mid-December. So there you go. For the next couple of weeks, that's it. Moo, free stocks, other stuff down below. Check it out. Other channels, links there if you are interested. Thanks so much for watching. Hit the thumbs up button. Consider subscribing. Hope you guys have a nice week. I know I would love to see a nice week, but again, right, the portfolio, we are staying the course. I'm not going to be, panic selling random stuff. Let's let things play out. We'll see how it goes. Thanks so much for watching, guys, and we'll see you in the next one.